introduction name. My name is Austin, King of FS. You already know that, you know the drill. So my pattern is very simple to trade volatility indices, both currency paired, work in all pairs. So it's very simple. It's just for you to understand where the market is really going. And today I took this setup. I took this setup actually. You can see the market. It's very, very simple to do. You just have to maybe understand what you are doing in the market, understand how to take the market, and you will be good. You will be fine because you already know what you are doing in the market. So it's very simple. I'm going to clean everything, then analyze it, and I'm going to start from the beginning and analyze the market. So in volatility 25 index, I already know that the market is pulling down, which is in higher time frame, which is the daily time frame, 24 hours. You already know that the market is pulling down. So the market is really in a downtrend. Is in a downtrend. This is the most thing you have to understand about this strategy. The strategy is very simple. Is for you to understand if the market is pulling up, maybe he giving you a break of market structure to the upside, break of market structure to the upside, then you have to understand that this low have to go. This low have to go. When the low goes, you have to take this trade and the market will pull all the way up. So that's my strategy. It's very simple. It's for you to know that okay, this is a break of market structure. So the low have to go. The low have to go because why? You are going to maybe in a daily time frame, you already see that this market is in a daily time frame. You are going to see, okay, fine, is the market is in a daily time frame. So and you can see this pullback from here. So this indicates the daily time frame. So you are going to see that the market was pulling all the way up from here, and then it start pulling down because what the market wants to end. The market wants to end, so it will start pulling down because that is what candlestick is all about. If you understand candlestick, you are going to know that yes, this is how market really moves. So you are going to see a full candlestick body, are going to see the open of the market, and this is the week. Maybe the market bring out week right here, and then the market will push all the way up, all the way to the upside, and then pull all the way to this side, and then it will pull back when the candlestick want to break. So you already know that that's what the market is going to do. So now you already know that okay, fine, the market start from here, which is the market opens from here, which is yesterday. You can say yesterday, or you can say of 4 hours, because this strategy you can use it in 4 hours, you can use it in daily, you can use it in any time frame. So you can see that the market in a daily time frame, it opened from here, then the market pulled down and then start pushing all the way up. After pulling all the way up to this level, then it coming back to this level. After coming back to that level, what you are going to be seeing in the market when the market opens again is going to pull down and then give you a break of market structure. After giving you a break of market structure, the market is going to pull back to take out that low, that first low that it created. It's going to take it out and then pull back. You understand? This is very simple. It's very simple. You can understand it using your candlestick. Understanding candlestick is more important in trading derivative indices or both currency pairs. Both currency pairs is very, very crucial. You understand that the market move step by step. If you don't understand it, you are going to be losing a whole lot of money in trading. So I'm going to show you this concept on how I was able to take the trade. You can see it right now. The market pull back to the daily time frame, then break the daily time frame, break here, and the market pull back to this level, and then it push all the way up, giving you a break of market structure. Then the daily is not the daily time frame is not haven't ended yet. The daily time frame haven't ended yet. So what you will be thinking is for the market to take out this low, because this low is now protected because that was yesterday low, because you already know that the market is pulling in an uptrend. You already know that the market is pulling in an uptrend. So you have to wait for the market to take out this low. After taking out the low, then you just enter from an order block or maybe a fair value gap in this level and expect the price to push all the way up. So I'm using a daily time frame to maybe explain this, but in my entry right there for where the trade I took is not in a daily time frame, is for 4 hour time frame. You can do it in 4 hours time frame, you can do it in 8 hour time frame. It's very important you understand what you are doing in the market. It's very important. So this will now be your liquidity, because I like when the market take out liquidity first. It will take out liquidity. So this will now be your liquidity right here. So you will allow the market to come back, take out this liquidity, find on another block to take the trade to the upside. It's very The strategy is very simple. So let's go to live trading section in 4 hour time frame and how I was able to take this trade. And it's very understandable. You can literally just understand it. So going back to 4 hour time frame, I saw that the 4 hour time frame is bearish. You can see the candlestick very small. You can see the daily time frame. It doesn't have enough move, but with that little move that it takes, you can literally understand the market and take the money out. You can take the money out. You can take money out in maybe 1 hour time frame, 1 minute time frame, 5 minutes. You can take money out because why? Your entry is going to be in 5 minutes or 15 minutes or maybe one minute time frame. So let's just dive into it. You can see right here. This is where I took the trade from, and then the market just pulled back and then give me hit my take profit. So it's very simple to understand candlestick. You can see right here we don't have any wick right here. Sometimes the market will just pull back, then take out this low, right, this high right here, where the market opened from before pulling down. But in this case it did not do that. In this case it did not do that. So what you will be expecting in the market is this. It's very simple. You can use this in a daily time frame, you can use it in 4 hour time frame, you can use it in the 8 hour time frame. But you have to understand the market trend. Is very crucial. It's crucial to understand the trend of the market. Just know, okay, this market is bearish, so what should I be looking out for? What should I be looking out for? So going back to 15-minute time frame. Let's just dive into 15-minute time frame. So you can see that the market open in this level right here and then pull back. Market pull back, and then when the market wants to close, it pull all the way up. After pulling all the way up, and then the 4 hours now open, because here is the level that 4 hours open. Here was the level. So the market just continue without no weeks, and it just continue to pull all the way down, all the way down. So what I was expecting, because why, he have already created a liquidity point at this level. You have already created a liquidity point at this level. So what I was looking out for is for the market to take out this liquidity and then respect this order block. Respect this order block. It's very simple. If you understand what you are doing in the market, you can see a break of market structure right here. That was the break of market structure you see that I drawn. You can see a break of market structure right here. You can also call this a break of market structure. You can also call this a break of market structure, but that I won't take that as a break of market structure. But what I was expecting the market to do is for the market to pull all the way up, taking out this liquidity, which is the market where it prints at first, taking out that liquidity and then topping into my order block before pushing into my take profit. It is very simple, very simple. So I have my take entry right here. Entry was in this order block. Entry was in this order block, and my take profit was at this level. Yeah, my take profit was at this level. That's 4.74 hour. 4.74 hour. It's very simple to understand what you are doing in the market. You are going to backtest this, because if you don't understand what you are doing in the market, you haven't backtest that strategy, you are going to be losing money each time you are trying it. So it's very simple for you to understand that everything I'm going to be showing you guys in this channel is for you to go back and backtest it. Understand what you are really looking at for in the market, is to understand what you are really looking at for the market. So the next 4 hours open right here, and then they pull all the way up, giving us this week going back to other block, and then the market just continues selling, because why, we are in a downtrend. It is very crucial to understand what you are going to do in the market. It is crucial to understand that. So you can see, let me just bring out maybe a daily time frame perspective so that you can see it's going to be happening every day. It is going to happen every single day. It's going to happen every single day. When you understand what you are going to be doing in the market, that's the more important thing. That's the more reason you should backtest this. So you can see this daily time frame. The market just opened here, give us a week, and then pull all the way back down. And when the market wants to close, it push all the way up to the upside. This yellow line indicates a daily time frame. Every yellow line here indicate a daily time frame. So then you will now understand that okay, if the market wants to push down, because why this market open right here, so you have to give you a week to the upside. If this market wants to give you a week, where would the market respect? That's the more reason, that's the thing you should be asking yourself. Where would this market respect for it to push down and give me this take profit? It is very crucial to understand it. It is very crucial to understand that. You already know that the market is in a downtrend. It's in a downtrend. Fine, you already know that. So where is this market going to get to? Because it's going to give me a week because the market just opened right here, and it's going to give me a week before pulling back to my take profit or pulling back to the next the low of yesterday or the high of yesterday. So it's very crucial to understand that. So now you can see a breakout block right here. You can see a breakout block right here. So if you don't understand breakout block, you can just maybe DM me. I think I have a video about that. I think I will post that very soon. It is very crucial to understand breakout block, order block, and fair value gap. It is very crucial. So you can see right here we have a breakout block. We have a breakout block. And you can see in this breakout block, we have a liquidity. The market creates a liquidity in that day. The market creates this liquidity right here. You can see a break of market structure, which is in that next day, a break of market structure. So the market pull back to this level. So now you can see this maybe engineer liquidity just to tap into this breakout block. The market engineer liquidity to tap into this breakout block. So if you go to 15 minutes time frame, you are going to see the engineer liquidity that I'm talking about. Going back to 15 minutes time frame, you are going to see it very clearly. So you don't have any liquidity right here. You don't have the market is just straight and in the 50% level of that daily time frame, because you are going to measure 50% level of that day to the nearest high. You're going to see a 50% level right here. This is the 50% level. So where you should be looking at for a liquidity is this 50% level. If you don't have 50% level liquidity, you are not going to be entering the trade. 50% level is your liquidity. It's where you should be looking at for liquidity. You can see that the market just tap into the liquidity level, the 50% level, and then the market push back. It push back, and then the market respects small order block. If you go to maybe 1 minute time frame, you are going to see order block, and then the market pull all the way up. Here is now your liquidity, because why you don't have liquidity for the left hand side, you don't have liquidity, which is the yesterday high, or maybe day before yesterday high. You don't have liquidity right there. So now the market now engineer liquidity in the next day. It is very easy for you to know this. It is very easy for you to know this, but understand what you are doing in the market. After seeing that, okay, fine, this is now your liquidity. The market take the liquidity out, and your entry was right here because why you want the market to take that liquidity, and your breakout block from a higher time frame, your stop loss is just right there, and your take profit is on this level, which is you have to understand this my fee point, because it will give you maybe more higher points in the market, and maybe it will happen next day or next 2 days, but definitely it will hit your take profit. maybe sometimes it doesn't hit sometimes. So I just like maybe this low right here, the market will just hit there, which is the 3.2 arrow. You can just hit there, and then I will take some trade out. Sometimes it will just come back to this level and then hit my take profit. Sometimes it will happen maybe 3 days or 2 days before hitting my take profit. So you have to understand what you are doing in the market. So in this other day, you can see that okay, the market was just pulling back down. The market was just pulling back down. So we don't have any setup right here because the market didn't give us a pullback in that day, because was just market open here, then give us a week, and then pull back without no week, it just break. So you will be expecting the market to pull all the way back down, or then coming back. Maybe sometimes it will take out liquidity right here. Sometimes it will take out this liquidity and then start pulling back down. But in this scenario, it did not happen that way. So you can just take this as your order block and then expect the market to pull all the way back down. So understanding this full concept, it will happen always. Like if you go back to another day, it will always happen. It will always happen. Just understand what you are doing, what you are looking for in the market, and it will always happen. So you can see this. Let's say the market open right here, and then the market was just consolidating in that day, and you already know that okay, here is my order block, or here is my breaker block if the market come to this level. Because while the other day the market was just it pull back with weak and then pull all the way down and give us a little weak before the opening of the other day, and then the market was just pulling all the way back up. So you have to look for a place to enter the trade. It is very crucial to find a place to enter the trade. You can see here, right here, if you go to maybe a 1 hour time frame or 2 hour time frame, you are going to see that this zone is an order block. So let's just try that. Let's go to maybe a 1 hour time frame. Let's go back to 1 hour time frame. This video is so long because why? I want you to understand what you are doing in the market. You can see that here this zone is an order block. It's an order block. You can see say that you want to take this zone as your order block, but the market have already filled the order block, and now the market pull all the way back down and give you another order block right here, and the market fill it again. So the next order block that is valid right now is this order block. You can see how the market respects this order block, and then it was 50% level, and we have a liquidity right here in that same 50% level. Let's just use our Fibonacci level so that you can understand what I'm saying. So all these liquidity points you can just see here was not in the 50%. All of them was in the 50% level. You can see this was in the 50% level. So all you have to do is to wait for the market to just pull all the way up to your order block, because why? That is where you want to enter a trade from. It is very crucial to understand that. It is very crucial. So you can just enter the trade from here. Maybe sorry, you can just enter the trade from here, entry for a sell, and then you'll take profit, your stop loss at this level, or going for 2 to 3 arrow. So your take profit is just right here, then that's 2.59 arrow. That is very simple. The next day give you another setup which is the same setup, because why? We already see that the market have already traded to this order block. Fine, now the market opens and then it pull all the way back, then come over to this order block right here, this order block right here. The market pull back to this order block right here. What do you expect the market to do? Is to push back. That's what the market did. It just pull all the way back up to give you an order block. If you go to a 15-minute time frame, you are going to see that there was a liquidity right here that the market take out before pulling back down. It is very simple for you to know that. It is very simple. Just know where the market is going and then just trade with it. So for you to understand that, okay, fine, I've already changed. I already know that, okay, fine, the market have already been selling for almost 1, 2, 3 days. So the next day now just opens. So I was expecting this other block to work, but it didn't work. But you are not just going to be 50% all or every time 100% sure of what you are doing. Sometimes you are going to take loss. So you have to draw your trend line. Understanding trend line really matters. Really matters. You can see that the market break out of that trend line, which is the market didn't respect your order block, then now give you a change of character. What you will be expecting from this market after taking loss is to wait. Don't just rush into the market and just expect to get more profit. So just wait, and then the market would now come back to retest the trend line. Then you can just enter from here. I've already explained trend line a lot of times in this channel. You can just go back and then just understand it. Then just wait, and then you can see that the market just retest the trend line. What you should be looking at for entering, because maybe you haven't wake up, then just seeing this market, or you wake up maybe 12, because that's when the market break in daily time frame 12. So we can see this, and those targets this low right here, that's 3 hour. You can just get 3 hour out of the market, and then just let the market be. You lost today, and the next day you take another take profit. That is fine. That's fine. That's how to take trade. It is very crucial to understand that that's how to take trade. So you can see that the market was still pushing up that next day. But if you can just hold it for the market to just pull all the way back, or and then giving you all those 6 hour, you can just wait for the market to do so. And then the market close without no week, which is that next day, market close without no week, pull back up, pull back down, and then just keep pushing down. Then maybe you will be expecting this other block to work. But on the standing trend line that the market was pulling back up, and then you have another trend line that was really really respecting it, and the market break out of that trend line, you should be looking for yourself. So understanding trend line with this strategy is very very crucial. It's very very crucial. This video is so long because I want you to get something. It's going to be happening every single time you are in the chart. Is going to happen. So fine, you can see this right now. You can see this right now. You can see your order block. You can see where the market open, and then the market pull all the way down, and then give you a week, and then it pull back up, because the market open right here. It give you a week, then the market pull back up, and then it end with pin bar. Okay, let's mark this, and then let's just mark this, and then go over to daily time frame so that you can see what I'm saying. You can see what I'm saying. This market will always work like perfectly. So you can see a daily time frame end with pin bar. You can see it's very crucial to just understand it. It's very crucial to understand what you are doing. The market end with pin bar, but definitely you already know that the market is pulling up, which is an uptrend. You already know that the market is an uptrend. What you should be looking out for is buy opportunity. So going back to maybe a 1 hour time frame, or maybe 15 minutes or 30 minutes, is very crucial to understand. You can key the market like this. It's very simple strategy, simple as fuck. Sorry for saying fuck, but it's very simple. Understanding the strategy is very simple, but your psychology need to work. Your psychology really need to work. So fine, you already know that. Okay, fine. This was a break of market structure with body. So I like taking my break of market structure with body, not with wicks. And you already know that. Okay, fine. The market is pulling all the way up, and today the market just suddenly it give you a break of market structure. So what you should be looking out for is maybe for liquidity to form, and then you enter in this 4 hours, or maybe let's say 2 hours order block. Yeah, we have 2 hour order block right here that the market top into, but it didn't give you a liquidity. That would be a crucial, well, that would be a risk, a 50-50 risk. So because I would like my order block to have a liquidity spot. After tapping it, then I'll just target where I'm looking out for. So you can see the next this before this day, it is very crucial to understand that, okay, fine, the market was really in a bullish trend, and suddenly we have a break of market structure. So you can see this day, suddenly we have a break of market structure, and then the pullback happened, which is giving us the week, and then suddenly the market pull all the way back. If you get to 15-minute time frame, you are going to see an order block right here that the market respected. Maybe 5 minute time frame, I think I can scroll back, but 5 minute time frame, the market give you an order block, which confirm that this order block is valid after the break of market structure. That the market don't want to push up. It don't want to push up. Yeah, the market don't want to push up anymore, because why? You already see that in 5 minute time frame. I don't think I can go back. Let's just try it out. Maybe 5 minute time frame. Let's just try that, because you are learning something. It's not too hard for you to understand what you are doing in the market. Let's just find that level, and then let me teach you something. It's very crucial to understand what you are doing in the market. If you don't understand, it's going to be hard for you. If you don't understand what you are doing, it's going to be hard for you. So you can see this level right now. So we have a break of market structure right there. After the break of market structure, you can see in a lower time frame, we also have another break of market structure in a lower time frame. Then you will be finding a liquidity, because why? You will look for a liquidity that would push the market down, and now we have a liquidity right here, and that liquidity is not thinking that he has the most strong part of it, and then you have to find a confirmation entry. You have to find a confirmation entry to enter that sell to happen, just for you to enter the sell, for the sell to happen. Because why? Here is the liquidity. You should be looking out for 50% level to enter the trade. But right now, the market is pulling up in an uptrend. So it is this is going to be risky. But going back to 15-minute time frame, you are going to see, or maybe a 1 hour time, a 1 minute time frame, you are going to see a break of market structure. I can take week as my break of market structure. Then we can see a week right. You can see all this level as your liquidity. The market top into this order block, and then really give you a bearish move, then you will be expecting this low to go, because why? That was the lowest. That was the place that the market gets to that day. So you'll be expecting that low to go, because then you will be more little risk but more reward. That's what you should be getting from this. A little risk and more reward. Then your take profit should be right here, which is about 7R, 0.6R. So it's very simple. Just take the trade, understand what you are doing, and just keep grinding, keep trying your best, because you definitely find what you are looking out for in the market. You will definitely, it is very simple. It is very simple to find what you are looking at for the market. The market will give you many approach, but you have to follow your rules. You have to understand, okay, fine, what will really drive this market up? What will really pull it market down? It is very crucial to understand that. So understand the 4 hour time frame. Maybe this was a 4 hour time frame. You can just say, okay, fine, this is a 4 hour time frame. The market was pulling back up, then the market pulled back down, and then we have a break of market structure in this level. We have this liquidity sweet spot, and we have this other block right here. You can still take trade like that. It's very simple. You can go over to 4 hour time frame. Just keep looking. You can maybe go over to 4 hour time frame. Let's try. Let me try something for you so that you can understand what I'm trying to tell you. Okay, fine. This level right here, you can see this level right here. All those daily time frame. This was the daily time frame. This was a daily time frame. I just want to mark it out for you to see that you can get a lot of entry in that daily time frame in 5 minutes. Let's go back to it so you can see what I'm telling you. You don't have to draw your trend line. You don't have to draw trend line, draw and draw and draw. Understanding this concept, you can make a whole lot of money. Understanding this concept, you can make a whole lot of money from trading. Just understand what you are doing in the market. So in 4 hour time frame, you are going to see that the market opens and close, opens and close, open and close. So what you should be looking out for is not opening and close, because why? You already know that the market is pulling up. The market is going in an uptrend. You can see a break of market structure right here. You can see the market give us a liquidity, and then the market didn't come back to order block, which is fine. Another order break of market structure, the market pull or it didn't pull back to order block, which is fine. You missed those trade. So you can see another order block right here. You can see a break of market structure. The market already come over to this order block, and we have a little liquidity right here. If you go to 15 minutes time frame, you are going to see that this was a liquidity spot. You can see that this was a liquidity spot, and then 1 hour time 1 minute time frame, you can see this was your order block in 1 minute time frame. What do you expect for the market to do is to push all the way up, and then another trade again, you have a break of market structure. You have a break of market structure. You don't have any liquidity yet, and then you can see your order block right here, because why? You already know that the market is pulling all the way up. So the last candlestick that give you a wick to the low side, so that's your order block. So you can just target it. You can even see a wick in 1 minute time frame. You can see a liquidity spot right here. The market pull all the way back and then come back to it and hit your order block, and then you can see the massive pullback. So it's going to be happening always. When you understand what you are doing, you are going to be making money from it. So this is where the video ends, and I'm going to post more videos, more content. So do well to subscribe to my YouTube channel. Understand what you are doing. If you don't understand, just you can just hit me up. Hit me up on WhatsApp. You can hit me up on Telegram. You can hit me up anywhere on Instagram. I can send you a full guide of my videos showing you how to really trade, how to really think smart, because you are a retail trader, you have to be smart. If you are not smart enough, the market can take all the money you deposited. So just try your best. Understand, just keep grinding, just pick one concept, understand it, pick one strategy, understand it, and then you will be good. You can just see this. It is very simple. This is a sweep, which is find a liquidity spot before the market push all the way up. Then you will now know that, okay, fine. This is another understanding, which is confirmation for me, because I would like to see a sweep, which is I will call a liquidity spot, and then a break, and then an order block that sweep them. Give us that sweep will be an order block. That's another approach for me, and be expecting the market to get to this level. That is it. You don't need more strategy to this. A break of market structure, I'm already doing it, but I don't have maybe a liquidity spot right here, but I do have a liquidity here in 1 minute, and the market just pull back after it didn't come to the entry point. Then the market just pull all the way up, then it come back in 1 minute and then start pushing all the way up. It is very, very crucial to understand that. It is very crucial. It's very crucial to understand what you are doing in the market. The next day is very simple. The market will just pull in all the way up, and then it give us a break of market structure right here. So what you should be looking out for is for this low maybe to go, and then find an order block, because I can just take this full candlestick as my order block, because the market sits up into it, making it another block, and then the market pull back up. So I can be expecting this to happen. Can be expecting this to happen because why? I already know that the next candlestick is going to be bullish. So opening the market from here, then the market giving me a week, I can even try my best to enter the market here, but I won't enter the market there because I will need a confirmation. I need a break of market structure to confirm that okay, this market wants to push up. The market wants to push up. Then you just wait, and then the market pull all the way up. Then it give me this bullish move that the market, okay, the market want to really push up. Then I can enter the market here, my take profit right here, or I can just wait for the day. The market just pull all the way up to the upside, and then I'm seeing a break of market structure again, the market pulling back to other block, then it push all the way up. Then I know that okay, fine, it's already time for the market to push back, so I can just take the trade and then let the market goes where it's going. It is fine, just keep trying, keep understand the market. So if you didn't screenshot this, I would like you to screenshot it because it's very important you understand it. It is very important you understand it. You can see maybe a pull to the upside, put to the downside, break off structure, market pulling back down, giving you a liquidity. Sometimes it will give you this without breaking this structure. Then it will come back to this liquidity and top into your order block before pulling back up. This is another pattern for you to understand. This is another pattern. You will see a break of market structure that will give you a confirmation that okay, fine, this market wants to pull back up, but then my other block is just right here, and my 50% is also right here. So what I should be looking out for is this other block. Then the market just pushed back down and then come over to maybe another block that would not be valid, and then it pull all the way up and then come back to the downside, tapping into my order block. Then I should be looking for a buy. So another one, which is the first one that I draw. The first one that I draw, you are going to see market break structure to the upside, break structure to the upside, then it pull back, giving you another break. Be expecting that market to take this low out, coming back to your order block, and then it push all the way up. So it's very simple, just understand it and you will be fine. You will be fine. This is your order block right here. We're expecting the market to top into the order block. That's two break of market structure in this. But the first one is just one break of market structure. Sometimes it's two, sometimes it's one. But understand that okay, fine, this is the market, the daily time frame is bullish. So what I should be looking out for is a bullish trade, not a bearish trade. If it's a bearish, so it's just vice versa. So I should be looking for a bearish trade, not a bullish. So that is how you should be looking at the market. So thank you. I think that I will be ending this video right now and then posting another video. So do well to subscribe to know more about how to trade and how you can make money from trading. Thank you. See you guys. Peace.